So guys, I want to tell you what you'll be looking for in price for every day you come to the market. Okay, if you have not subscribed to my channel, please do that now, because this information is priceless and I want you to be a part of my community that will be learning from me on a steady basis. So what am I saying? Framing your intraday analysis. Let us start with a bullish position. For a bullish day, for any day, you want to be looking at your chart from 7 o'clock a.m. New York time. Okay, from 7 o'clock a.m. New York time, you are going to mark out the initial buy side and sell side liquidity in form of any swing point that is noticeable on the chart. You want to take note of that, because that is where you want price to go first. Like if you are expecting a bullish day, you want price to take out the initial sell side liquidity first and create a fair value gap for you. That is a CB, sell side imbalance and buy side inefficiency. It is only when you see that CB, that prominent CB, you should be seeing it as a manipulation in price. So what happens when that CB forms? When that CB forms, you are waiting for price to come back and close above that CB. That's the sell side imbalance. Okay, now there is nothing to be afraid of when you are framing your analysis on top of a sell side imbalance that has been rejected, or that has failed. Why? Because on a bullish day, right, you want to see price take out a low first before going up. That is like on a classical bullish day. So that is what you want to be seeing in price, and there is nothing bad about framing your analysis like that, or there is nothing to be scared about when you frame your analysis like that. So that is just it for a bullish day. You want to take a bullish position, when an initial sell side liquidity has been taken. And how do you know your initial sell side liquidity? Your initial sell side liquidity is just any high or low that has been formed after 7 a.m. New York time. After, not before. So guys, this is exactly what I was saying. For any day that you come to your chart, you want to first of all mark 7 o'clock a.m. right here. Remember, my setting is in New York time, okay? UTC -4. Depends on your geographical area. So this right here is 7 o'clock, and that is where you want to first of all mark for any trading day. And any low and high that you see post 7 o'clock is what you treat as your initial sell side liquidity and initial buy side liquidity. Now remember how price used to move. For any bullish day, once price opens, price needs to make a low first before making a high, right? Then continue higher. And the same thing goes for the short positions. If for a bearish day, once price, okay, not these two, okay, for a bearish day, once price opens, you expect price to make a high first before making a low to target downside, right? So this right here, the initial low that is taken in the case of a bullish position, and the initial high that is taken in the case of a bearish position, is what you are seeing here, because this is where we start to mark our day, 7 o'clock a.m. So we are waiting for this and this to be taken. All right, so let us see how price plays out. Let us know which one gets taken out first, the initial buy side or the initial sell side liquidity. So let me chip also that we are looking for something to tell us to enter into the market between 9:30 and 10 o'clock. That is where you want to mark. The reason why you are marking 9:30 is because it is the time that the New York Stock Exchange opens. Okay, New York Stock Exchange opens by 9:30 a.m. New York Standard Time. The New York Forex market opens by 8:30 a.m. All right, so we want to start trading when all the exchanges are open by 9:30. So we are looking for the first fair value gap that will happen between 9:31 and 10 o'clock a.m. So now the initial buy side liquidity has been taken right here. The initial buy side liquidity has been taken. You see how price is rejecting this high. So immediately this high is taken. It made a new high here and started to send price down. Now, whenever this happens, you will normally expect price to take out the initial sell side liquidity, and you can definitely make that your daily bias. You can, okay, look at what I'm saying now. You can actually make this your daily bias. Whenever price takes out the high, you look for a way to frame positions, maybe targeting fair value gaps to seek the initial sell side liquidity. But let us assume that we don't like what happened here, because what we are looking for actually is a huge gap like this that will tell us that the market has been manipulated. Okay, so remember, we are looking for the first fair value gap between 9:30 and 10 o'clock, and this right here is our first fair value gap. Okay, the low of this candle and the high of this smaller one is our first fair value gap. Sorry. So now we are waiting for price to close above this place, this fair value gap, to tell us that we are ready to frame a position. Okay, this is what you will look for every day when you are in the market, whether you are buying or you are selling. So the opposite of this is true for an uptrend, but since we are in a downtrend, since the price took out the initial sell side liquidity, we are hoping to frame a buy position on this fair value gap. You know, most people don't know is that buying on a disrespected sell side imbalance, buy side inefficiency is definitely a strong signal that you can take. But if you don't understand it, if you don't have this understanding, you will find it difficult to engage with price. But if you understand that a CB that gets disrespected forms a very valid entry for a long position, and that is what you call an inversion fair value gap. So let us see what price did after 10 o'clock. Remember, we don't take any trades after before 10 o'clock. So someone else must have marked this imbalance too. See, there is another imbalance between the low of this candle and the high of this candle. So there's another imbalance, and this imbalance has been disrespected because price has closed above this imbalance. So smart money is actually accumulating positions from this level, but we don't want to gamble. We just want to take the clear positions. Okay, and this is the very clear position that we want us to take. So we are working off this fair value gap up there. Okay, so you see, uh price also disrespected this fair value gap and gave us another fair value gap right here. Let me mark it for you too. So price has not even closed above this fair value gap, but we are still looking to see when price will close above it. See, the fair value gap is holding price from going up. So you have not even done anything in your chart until you get this bullish close above this fair value gap or this sell side imbalance. So this is where you want to be anticipating your moves to happen. Okay, so some people must have started buying from here, but remember, we are trying to be conservative and target this high here. So see, our first fair value gap price is still not showing us any signs that it wants to go up. So let us keep waiting until price closes above it. Okay, now we have our close right here. We have our close right here. Now this is where it gets tricky. Some people will prefer to take a buy position from the middle of this consequent encroachment of this fair value gap. Okay, some people will prefer to see price come down to it to take a bullish position, and some people will prefer to just take a position once they have seen a close above it. Depends on what kind of trader you are. Okay, if you are a conservative trader, you want to wait for price to come back to the consequent encroachment. But if you are not a conservative trader, that means you are an aggressive trader. Aggressive traders tend to take positions above this level. So our target is mainly this high that was created before this sell side imbalance. Okay, that is our target. So I will call it okay. This is actually a relatively poor high because this high did not offset this high right here. So I will prefer to take this as my target. Remember, relative poor highs are good places to target. So relatively poor high right there. So um, our position for the day, since we are bullish, has been framed when we saw a close above the sell side imbalance that was formed between 9:30 a.m. to 10 o'clock a.m. New York time. So that is basically it. If you're looking for something to frame your daily analysis upon, then you should try out this breakout strategy. It is not really difficult. Just know your rules and why you are applying them and when you enter a trade, and that will make your eyes clear for the day anytime you are coming in to frame your analysis for the day. Okay, so that will be all for this video. If you enjoyed this video, kindly like and subscribe to my channel, and share my video so that your forex trading friends will join my channel. There is a lot I have in store for you, and I'll see you in the next video. Peace and out.